Hi everyone, welcome back to Saheb Academy. Today in this third video of financial statements of sole proprietorship chapter, we are going to understand each and everything about profit and loss account, the concept of it, the detailed format we are going to discuss, how do we prepare profit and loss, and then we are going to see some formulas and understand about operating profit, what is meant by that, and then we are going to see closing entries that we pass in the journal to close all indirect expenses and indirect incomes account, and then how do we close profit and loss account as well. Okay, and then at last we are going to see a practical example on profit and loss account which will make you completely clear with everything. All right, so now before going ahead with this video, please make sure you have watched the previous two videos of this chapter. In the first video we have discussed the concept, and in the second video we have discussed about trading account and solved a practical example on it. So I will put the links of those videos in the description below. All right, okay, so now let's get back to this video. Now see, here we have the concept of profit and loss account. It's really simple. The first thing that you should understand is why are we preparing profit and loss account. It's really simple. We are preparing profit and loss account to know the overall performance of the business. From trading account we have understood, we get to know what gross profit or gross loss, which is only focused on the trading activity of the business, buying and selling. We are only focused on that. We got the micro picture. Now we want to know the macro picture, the big picture, that is the overall profit or loss that we have made in our business, which we'll get to know from profit and loss account, isn't it? I've told you we prepare these two accounts, yeah, in together they are known as income statement, and we get to know what the financial performance of the business, right? So that's how it is. We get to know how much profit or loss we have made during the accounting period. Yeah, this is prepared for an accounting period for the year. That is why if you will see in the format of profit and loss account or trading account, what do we have? We have over here for the year ending. We don't say as on certain date. That's in balance sheet. For income statement, for trading account and profit and loss, what do? We say for the year ending. Is that clear? Okay, fine. We understood that. We are preparing this to know the overall performance of the business, net profit or net loss that we have made. Fine. Now, how are we going to prepare this? It's really simple. First, what you have to do is you have to connect the two things. Then only you will get to know the overall performance of the business. See here, from the trial balance, we started preparing financial statements. Yeah, in trial balance, we have asset, liabilities, capital, expenses, and incomes, right? I told you expenses you have to break, incomes also you have to break in your mind, direct and indirect, isn't it? Yes. So direct expenses and direct incomes went in trading account. You got gross profit or gross loss. Then you have to prepare profit and loss account. Yes. So you have to connect the trading and profit and loss account. How do you connect? You carry forward the gross profit or gross loss, whatever you have. If you have gross profit, then it will be cross posted over here. If you have gross loss, then it will be cross posted over here. It's like that, right? So see, the first is that only. What you will do, you will cross post gross profit on the credit side. But if you don't have gross profit, let's just say you have gross loss, then it will come on the debit side. Is that clear? Simple. Now, profit and loss account is a nominal account. What happens if it is a nominal account? It means all expenses will be debited and all incomes will be credited, right? Debit all expenses, credit all income. See here, all the expenses will come on the debit side, indirect expenses, and all indirect incomes will come on the credit side. Fine. So see, indirect expenses and indirect incomes. Is that clear? Now, how you will get to know whether it's a direct or indirect income? See, we have discussed about that. What are direct expenses and what are direct income? Isn't it? Expenses that are directly related with the production of goods or incurred on the goods purchased till they are brought to the go down of the business. We have understood this completely in the second video, isn't it? So you know what will go in trading account, direct expenses and direct income, which is nothing but sales. So these two things will go in trading account, direct expenses and direct incomes. Then whatever is left, all those expenses and incomes will be what? Indirect, and it will go in profit and loss. Really simple and straightforward. That's what you have to do. Just understand what will go in trading account, direct. Then whatever is left, that is indirect, which has to go in profit and loss. Is it clear? Simple and straightforward. And then see what you will do. You will see which side is heavy. If credit side is heavy, then the debit side, yeah, if this is heavier, then you have a case of net profit. Your incomes are more than your expenses, you have net profit, obviously. But let's just say if it's the other way around, let's just say debit side is heavier than the credit side. That means your expenses are more than your incomes, then obviously you have a loss, which is called as net loss. Is that clear? That's how it is. Net profit or net loss, which will be balancing figure. You will have either of these two things. What will happen to this net profit or net loss? Understand, net profit or net loss, ultimate impact will go in balance sheet into capital account. If you have net profit, then net profit will be added with the capital. If you have net loss will be subtracted from the capital. Is that clear? That's how the impact will flow. You have to understand that properly. Fine, understood. Okay, so this is what a profit and loss account is. Now don't worry, we'll see the indirect expenses and indirect incomes, the detailed format. Yeah, you'll see that. Then see here, meaning and purpose. Profit and loss account shows the financial performance of the whole business during an accounting period, isn't it? Yes. Why do we prepare it? To calculate net profit or net loss. Now let's just see the formula. See, the formulas is the first formula that I want to tell you, net profit formula. All incomes minus all expenses, isn't it? That's what you have done, right? You will say, no sir, we haven't taken all incomes and all expenses. We have just taken indirect expenses and indirect incomes. No, it's not like that. Understand properly. To calculate the net profit, what we have done, we have considered everything, isn't it? It's just the format that you have separate things. Trading account separately for direct things and profit and loss for indirect things. But understand, these two things are connected. Gross profit has been carried forward over here, isn't it? From trading account, yeah, whatever the direct expense and direct incomes were there, that effect has flown in profit and loss account as well. So that is why the formula of net profit is what? All incomes minus all expenses. Whether it is direct or indirect, everything is considered. Is that clear? Simple. Then we have something called as operating profit. Now what is operating profit? We understood what is gross profit or gross loss, which is only focused on trading activity. Yeah, direct income minus direct expenses. Yeah, that's how we get gross profit. We understood that, only focused on buying and selling. But here in profit and loss account, we saw we have to consider everything, the whole picture. Connection of trading account, gross profit or gross loss, and then indirect expenses or indirect incomes, we get net profit or net loss. We understood that. What is this operating profit then? What is this operating profit? Operating profit means, understand, it is the profit that the business earns from only its operating activities. Just to run the business, what you have to do, you have to, run the operations, right? So how will you run the operations? You have to incur some expenses, you have to earn some income, you will earn some income. So that will be operating expense and operating income, right? So because of that, whatever profit you earn, that will be called as operating profit. So what you have to do, operating income minus operating expenses. Let's just say, for example, you are running a business, right? You are making purchase, sale, right? That will go in trading account. You know that whatever direct expenses, yeah, you have, and direct incomes, that will go in trading account. And then in profit and loss account, what will come? You will say in profit and loss, sir, see, depreciation will come over here, right? I have a machine which gets depreciated, that will come over here. And then some people don't pay me, so that's bad debt, that will come over here. And then you will say, I allow the discount, that's an expense, it will come over here. Then you say, I get the discount, so discount received will come over here. And then you will say, I have a loan also, so I pay interest on that loan. So interest loan is an expense, it will come over here. And then I have invested in shares of some other company, right? So I'm getting dividend from there. I have made a fixed deposit, I'm getting interest from there. So these are income from investments which will come over here as an indirect income. You see, all the incomes, yeah, all the indirect incomes and indirect expenses are sitting over here. Yeah, expenses have been debited, incomes have been credited. You have done that to calculate net profit or net loss. But understand the income from investment which you have taken, isn't it? Dividend received, interest received, these things, right? These are not related with your business. No, these are not related with your operations of the business, right? So those are non-operating incomes. Which one? Dividend received, interest received from fixed deposit. And then let's just say, for example, you have given charity. Charity giving is what? It's an expense which will come over here. Is it related with the operation of the business? No. So that's what? That's non-operating. Fine. So if you just exclude non-operating things from profit and loss account, you will get operating profit. That's the idea. Let me just show you the flow chart. See here, we have expenses of two types. You all know, direct, indirect. Direct go in trading account and indirect go in P&L. We all know that. Yes. Now, direct expenses are always operating expenses, focused on buying and selling, directly related with the operations of the business, running of the business, completely operating. Fine, no doubt about that. But for indirect, you have to understand there will be some non-operating expenses. Example, the interest you pay on the loan, that is non-operating expense. Okay, it is not related with the operations of your business. Fine, the charity which you pay, that is also non-operating expense, which will be debited in P&L. But if you just exclude that, then you are moving towards calculation of operating profit. Okay, and then operating expenses means whatever expenses you incur, stationery, telephone bill, electricity, depreciation, postage, all those are operating expenses, whatever you incur to run your business. Is it clear? That is also in P&L. Fine. So you just want to exclude these things to calculate operating profit. Then the same case is with the income as well. Let me just show you. Direct income, indirect income. We all know direct income go in trading account, indirect income in P&L. Yeah, we all know that. Now all direct income is completely operating income. Yeah, the sales, that's operating income. Okay, right. But then in indirect income, which you take to P&L, in that there will be operating as well as non-operating. Operating means what? Operating means discount you have received. Yeah, that is what operating income. Non-operating means what? You have invested in any company, right? You're getting dividend from there. You have purchased bonds or debentures, you're getting interest. You have made investment in fixed deposit, you're getting interest. Those are non-operating income. Is that clear? So you have to exclude this also. So if you just exclude that, yeah, non-operating and non-operating, then what will happen? From this, you will be able to calculate what? Operating profit. What you're doing? Operating expenses minus operating incomes. Is that clear? That's the concept. You get to know just by your main operation of the business. Yeah, not just buying and selling, not trading account. From the entire operation of the business, what is your profit or loss? That's what you will get to know. Is it clear? The concept is clear of operating profit, isn't it? Yes. And then I have to also tell you a trick. Understand what goes in trading account, right? Only few things goes in trading account, isn't it? Whatever that is related to the factory, sale, purchase, opening stock, closing stock, right? Direct expenses. If you just remember these things, understand properly, then whatever is left, whatever new expense or new incomes you see, you don't have to worry about that. You will directly take it in the profit and loss account. Yeah, see, the rest of the expenses and incomes will go in profit and loss account. Is it clear? Simple and straightforward. Now let's just see the detailed format and let's just have a glance of indirect expenses and indirect incomes, and then we'll move on to the closing entries. Okay. Now see here we have the detailed format of profit and loss account, which will be there in your book as well, right? The same format. Yeah, the same format. It's just that there are lots of indirect expenses and lots of indirect incomes. Is it clear? So see here. First, as usual, gross loss or gross profit. Yeah, that's how we start. And then all these are direct expenses, as you can see: salaries, rent, printing and stationery, postage and courier, telephone and internet expense, insurance expense, business promotion expense, repairs, depreciation, interest. Now the interest which comes on the debit side is what? Interest expense, or you can say in simple words, interest paid. But understand, this is profit and loss account. We are preparing this as per accrual concept. So it is not necessary that all the interest is paid. Okay, is that clear? So that is why you don't say interest paid. Actually, it's not correct. We say actually interest expense. Fine. Okay, fine. Then see, 2 bank charges, 2 general expenses, 2 electricity, 2 loss by fire or theft or damage. Yeah, this also comes in what do you say, profit and loss account only, because it's a loss. Loss is what? Loss is an invisible expense. You haven't paid anything. It's just that it is destroyed. It is lost. Fine. To commission. Now commission also, there can be 2 types of commission: commission paid or commission received. Commission received is an income, commission paid is an expense, right? So paid will be debited over here. If they just say commission, you have to understand it's commission paid. Or maybe in the question you have to identify whether it's on debit side or credit side. In the trial balance, if it's given in the question, you have to see in which column it is there, right? The amount is in debit column or credit column. If it is in debit column, it's commission paid. If it is in the credit column, it's commission received. Like that, you have to understand each and everything. Okay, next to advertisement, to freight outwards. Yeah, freight outwards means what? Carriage outward, all that. To discount allowed. Yeah, there can be discount allowed as well as discount received. Discount allowed means what? Expense. Discount received means income. Then see, to traveling expenses, loss on sale of asset, to bad debts. Yeah, now loss on sale of asset is also what? Do you know? It's a non-operating expense. Okay, and then see, to bad debts. All right. And then on the income side here we have, see, rent received, discount received, commission received, interest received, profit on sale of asset, and then by bad debt received, income from investment, by miscellaneous income. Yeah, any small expense that we club together and we just say miscellaneous income, right? It is, what do you say, it's not material to be recognized separately, so that is why we club small incomes and we club it all together as miscellaneous income. Fine, understood. Now this profit on sale of asset and this income from investment is what? It is non-operating income. Okay, because this is not related with your operation. Normally you don't sell your assets. You sell what? You sell inventory, stock. You don't sell your assets. So any profit or loss that happens because of that, that is not related with the operation. It's non-operating. And then income from investment means what? It means you have invested in fixed deposit, you're getting income. You have invested in any company, you're getting dividend, right? All that. Fine. And then the same case, either you will have net profit or net loss. Is that clear? So this is a detailed format just to give you an idea what all expenses or incomes can be there in your questions. Fine. There can be more also. This is just a general format, right? Okay. So that's it. Now let's just see the closing entries. Now see, here we have the closing entries that we have to pass regarding profit and loss account. It's really simple. What are closing entries? Closing entries are the entries that we pass to close all expense and incomes account. It's that simple. Understand, we have asset, liability and capital also, but we do not close these accounts. Why? Because they get carried forward to the next year. We take them to the balance sheet. Yeah, they will be there in the next year also with the same balance. The closing balance will become opening balance in the next year. But with expense and incomes account, it's not like that. At the end of an accounting period, we always close them. We make them zero. Right? In the new year, again, we start with the zero balance account. That's how it is. Fine. Okay. So if you are preparing profit and loss account, what we have to do, whatever expenses and incomes will go over here, all those accounts we have to close. And then the balance will be transferred to profit and loss account. Right? See here, these entries you will pass to close all the accounts of concerned items. Concerned items means all the indirect expense and indirect incomes, and transfer the balances to profit and loss account. See here, indirect expense and indirect incomes, right? Profit and loss account debit to expense, income account debit to profit and loss. Now how you will do this? What's the logic behind this? The logic is really simple. Understand, expense have debit balance, income have credit balance. So to cancel them, what you have to do, to make them zero, what you have to do? You have to do opposite. Expense you have to credit, see, it is credited. Income you have to debit, see, it is debited. So what's happening? It is getting cancelled. See, expense have debit balance, to cancel you are crediting them. Revenue or income has credit balance, to cancel you have debiting them. Clear? Simple and straightforward. And see, the other debit or credit will be profit and loss, profit and loss. Fine, the balance has gone in profit and loss. Now, one more thing. Before doing this, you also have to do this. Yeah, we have understood in the trading account the closing entries, isn't it? Here also we pass all these closing entries. So here also what we have done, we have taken the gross profit or gross loss to the profit and loss. We have closed the trading account. Yeah, so this is the first step actually over here. Is that clear? Yeah, because see, in profit and loss account, what do we need? In profit and loss account, we need gross loss or gross profit, right? So how it will come? By this journal entry only. Okay, either of these two journal entries you have to pass. Is it clear? Simple. Now what are the examples of this? Examples are really simple. Profit and loss account debit to bad debts, profit and loss account debit to depreciation. Let's just say you have paid interest, profit and loss account debit to interest paid, like that. For income, let's just say discount received to profit and loss. Let's just say, for example, you have received interest received to profit and loss. Yeah, let's just say, for example, you have received dividend. Yeah, dividend income to profit and loss, like that you have to take. Fine, understood. Then you have to close the profit and loss account. How you will close the profit and loss account? What happens at last in profit and loss? Either you will have net profit or net loss. What happens to that? Net profit gets added to capital, but if we have net loss, then it gets deducted from capital. How do you increase or decrease the capital? Just tell me. We increase the capital, see capital or equity, right? It has credit balance. To increase the capital, we credit. To decrease the capital, we debit. So that's how you will pass the journal entry. To increase the capital means profit has happened, you are increasing the capital, you will credit the capital. Okay, see, capital account will be credited, debit would be profit and loss. But if you have a net loss, then you have to subtract from the capital, right? So how you will decrease the capital? You will debit the capital, because it has which balance? It has credit balance. To decrease, you have to do opposite, you have to debit. And then the opposite, debit credit, would be profit and loss, profit and loss. Is it clear? Yeah. So that's how it is. Okay. So this is the entire concept about the closing entries regarding profit and loss account. Fine. Okay. Understood. Now let's just see the practical example. Now see here we have the practical example of profit and loss account. Let's understand how to prepare this. Then you'll be crystal clear with everything. See here, let's just read. From the following trial balance, okay, a trial balance is given to us. Prepare trading and profit and loss account. So they're asking both. And I have to tell you this. What we will do is, see, we will not prepare separately trading account and profit and loss account. Together only we will prepare. First we'll prepare trading account, and then where trading account finishes off, from there only we'll start profit and loss account. Okay, you will see, it's really simple. For the year ended 31st March 2025. Okay. So see, they have given us debit balances, and here we have credit balances. Okay. So here also, these are also debit balances. Okay. All right. So see, first we have debtors. Debtors means what? Receivables. Is it expense or income? No, it is asset. So this goes in balance sheet. So we are not concerned about that. Okay. And then stock on 1st April 2024. 1st April means opening of the year. So this is what? This is your opening stock. Okay. All right. And then you have land and building. Land and building is what? Asset. Balance sheet only. It's a balance sheet item. Right. Cash in hand, cash at bank, same. It's balance sheet. This pen is not working. Okay, fine. Balance sheet. Both balance sheet. Cash, cash, cash. Because it's not expense or income. Fine. Next we have wages. Wages is trading account item. Isn't it? It's a direct expense. Then we have bills receivable. Bills receivable is what? It is balance sheet item only. It's an asset. Interest. Is it interest paid or interest received? Tell me. Interest, it's debit balance it's given, right? So that means this is interest paid. Interest expense. It will go where? It will go in profit and loss. Isn't it? It will go in P&L. Why? Because it is not direct expense. It is indirect expense. Okay. Then we have bad debts. Bad debts also will go in P&L, right? And then repairs. Repairs is also what? P&L item. It's indirect expense, isn't it? And then furniture and fixtures. Is this an expense? Furniture and fixtures. Furniture is an asset, right? So this will go in balance sheet. But we are not preparing balance sheet right now, okay? Because we have not learned that. So forget about the balance sheet. We'll do only trading and P&L account, okay? And then see depreciation. Depreciation is also what? An indirect expense. It will go in P&L. Then you have rent. Rent also P&L. But tell me, is it expense or income? Is it rent paid or rent received? How you will understand? They have said just rent. If they say just rent, then you will understand it is rent paid. But then there is one more way to see this. If they have said debit balance or it's given in debit column, that means it's a rent paid only, rent expense. But if it is given in credit balance, that means it's a rent received, it's income. Okay. So you have to be careful. Salaries. Salaries will go in P&L. Okay. And then drawings. Drawings, it's balance sheet thing. We will not touch that. Okay. It will be deducted from capital. Now we are not preparing balance sheet, so we are not concerned about that. Okay. And then purchases. Purchases trading account. General expenses. General expenses means what? Does that go in trading account? Is it direct expense? No. So it's indirect. So this will go in P&L. Okay. Simple. Next we have plant and machinery. It's an asset. It will go in balance sheet. We are not concerned about that. Then see credit balances. Now credit balances are coming. First we have capital. Capital, it's not an expense nor income, so it will go in balance sheet. We know that. Interest. You see, here also they said interest, here also they are saying interest. So how do we get to know which is which? It's really simple. Credit balance interest means it is interest received, isn't it? It's income. Interest income. So this will go in P&L on credit side. Okay. So debit side things will go on debit side. Credit side things will go on credit side. Like that also you can think. Sundry creditors. This is also what? Balance sheet item. It's a liability. Right. And then we have sales. Sales is a trading account, we know. And then bills payable, balance sheet. This is also a liability. Right. So this was the trial balance. Inside the trial balance, did you see any stock? Yes, you saw the stock on 1st April. That was opening stock. That's fine. But did you see any closing stock? Stock on 31st March and all? No. So that means closing stock is not given. It's always like that. Closing stock is mostly not given inside the trial balance. Why? Because at the end of an accounting period, we make a physical count and then later we come to know how much stock is left. Okay? How much stock is left? No accounting has happened of that. No accounting has happened of that. So what we have to do of closing stock? It will be known from adjustment over here. See here, on 31st March 2025, the stock was valued at rupees 1 lakh. So they made a physical count and then at last they are saying us, it's not in the accounting, no ledger account, nothing of closing stock. It will be separately mentioned outside the trial balance, outside the trial balance. And this statement in outside the trial balance is called as adjustment. So far, we have only talked about closing stock adjustment, nothing else. For all the other adjustment, we'll have separate videos later onwards. Okay, right now we are only focused on the structure of financial statements. Yeah, for a small business, for sole traders. Right. So now let's just see the solution of this. Now see here we have the solution. It's really simple. How do we do this? We prepare trading account and profit and loss account together only. First trading account and then where it finishes off, from there only we'll start profit and loss account. So the heading should be trading and profit and loss account. And then you have to write the description properly for the year ending. Yeah, the income statement is always for the accounting period. For which period? You have to look into the question. It's 31st March 2025. Yeah, the year which ended on this, right? And then this is the debit side, this is the credit side. Here you will take all what? Expenses, here all incomes. First direct, and then indirect, isn't it? Yes. So let's start. First we'll start with the trading account. So in the question you have to look for direct expenses and direct incomes, right? But before that you have what? Opening stock, right? That's what will come on the debit side of trading accounts. Here stock on 1st April 2024. That's 50,000. So let's just take that. Okay. Opening stock 50,000. Clear? And then we are going to see about purchase and sales. Now for purchases, are there any purchase return as well? No, no purchase return. Directly we have 1 lakh purchases. Okay, we'll take it on debit side of trading account. And then we have sales also. Sales will come on the credit side of trading account, right? But do we have any sales return? No, we don't. So directly we can take this 1 lakh 70 as well. So see, sales 1 lakh 70, purchases 1 lakh. Is it clear? Simple and straightforward. Next, we have to look for direct expenses. Do we have any direct expenses? See, balance sheet, opening stock, balance sheet. Yeah, see, wages they are saying 30,000. This is a direct expense, directly related with the goods of factory. Okay, and then all are what? Indirect expenses only, right? There are no direct expense, only one item, wages. So wages we will take 30,000. Is it clear? Simple. And then closing stock. Now closing stock, you have to understand, it will be mostly not there in the trial balance, because what happens at the end of accounting period, we make a physical count and we come to know about how much stock is left. So always that will be there in the additional information or information outside the trial balance, which we call as adjustment. Is that clear? See, on 31st March 2025, the stock was valued at 1 lakh. Yeah, and you know the stock will be valued at lower of cost or net realizable value. But now you don't have to do anything, directly they have given you after doing the valuation. That's 1 lakh. So 1 lakh you will take closing stock. Is it clear? Simple. Now trading account is over. What you have to do, you have to balance. How do you balance? Just see which side is bigger and write that on the both the sides, right? Just balance. 1 lakh plus 1 lakh 70, that's 2 lakh 70 on both the side. 2 lakh 70 minus 50,000 minus 1 lakh minus 30,000. You're getting positive figure. That means you have what? You have a profit, 90,000. Is it clear? So that's called gross profit. Just because of your trading activity, just because of buying and selling, this much profit you have earned. This you have to transfer to profit and loss account. Where is profit and loss account? See, trading account got finished. Here only you have to start profit and loss account, right? So see, by gross profit brought down 90,000. This will be cross posted over here. And then what will happen is you have to look for indirect expense and indirect incomes and take it in the profit and loss. Let's just see how many indirect expenses do we have. See, we have interest paid, bad debts, repairs, depreciation, and then we have rent, salaries, general expenses. Yeah, so just take them directly. Interest, bad debts, repairs, depreciation, rent, salaries, general expenses. Is it clear? This is how you have to take it. see, 2000, 5000, 3000, right? 2000, 5000, 3000, and then you have depreciation 10,000, okay, and then you have rent 8,000, salaries 20,000, rent, salaries, and then you have general expenses 25,000, right? Is it clear? And then always remember, if you are in exam or anywhere, right, just leave some spaces, still leave 2-3 extra lines. If you make a mistake, then you will have a chance of rectifying it neatly, okay? All right. And then you have to look for indirect incomes. Look in the credit balances. Are there any incomes of indirect nature? Yes, we have interest received. Only one is there. Interest received 6,000. Just take that. Is it clear? Your job is over. You have taken all indirect expenses and indirect income. Now what you have to do, now you have to balance this account as well. So 90 plus 6, yeah, this side is bigger than that. So 96,000 on both the sides. Okay, 96, 96. Then you have to go on subtracting. 96,000 minus 2,000 minus 5,000 minus 3,000 minus 10,000 minus 8,000 minus 20,000 minus 25,000. That's equal to 23,000. This is called as net profit. Your incomes are more than your expenses. So you have a case of net profit, right? Overall in the business, this much profit you have made. Now what you have to do, this profit will be transferred to the capital account. Yeah, I have explained you. In the balance sheet, whatever capital you have, this 23,000 will be added to that. Okay, in this question we have capital, right? But we are not preparing the balance sheet. Yeah, we have not understood the balance sheet completely, so we are not preparing that. Capital we have 2,50,000. So capital 2,50,000 will go over here. 2,50,000 plus 23,000, right? So that will be equal to 2,73,000 capital. Like that you have to do. Is it clear? Simple and straightforward, right? I hope you have understood each and everything. It's really simple. It's not difficult. If you have any doubts regarding this, please ask me, right? And I will try to clear it as soon as possible. Yeah, you can comment or you can just take a screenshot and message me in Instagram, right? This is what we all discussed in this video, right? So that's it for this video. See you in the next video. Bye.